Hello, everybody. All right, so we have with us Pepper, um, who I've known for
While.
yeah, 7 years almost, I think.
That sounds right.
It sounds right, yeah, from Wildstar, and Pepper has worked as an adjuster for some time, um, doing like storm assessment and such after those hurricanes and such roll through. So do you want to briefly give a bit more of an explanation than
Sure.
that? Yeah.
Yeah, I can give it. I can. So yeah, I work as a claims adjuster. I've been doing it for about 20 years. And what I do is I'm an independent claims adjuster. So whenever an insurance company has too much work than normal people have, they call us in. We're like a temp agency. So I've worked for 10 different insurance companies, which has been a good way to kind of see how the industry works and kind of what it does. And there's a lot of mysticism around insurance, so hopefully I can dissolve some of that.
Right. Yeah. So uh, I wanted to kind of start off with a bit more of a uh, baseline of what that process looks like. So, obviously everyone is pretty much obligated to have housing insurance, and then nature happens. Um, what happens from there? What kicks off from there?
So basically, I mean, the entire concept of insurance is basically the idea of shared risk. It's
Mm-hmm.
the understanding that a tree could fall on anyone's house, for example. You don't really know if it's going to be your house or somebody else's, but if we all pay into a same system, if it does happen to you, you'll be taken care of, you'll be paid for it. Insurance companies skims a little bit off the top, and that's what keeps them in business. So basically, you have damage to your house, you'd call your insurance company. Somebody comes out, they look at the damages, they assess what it will cost to repair it, and then they'll have a check, and then they'll send it to the insurance company themselves. They'll review a file or review your claim, and then they'll write a check and mail it to you. And it's a fairly straightforward process,
Mm-hmm.
but a lot of people are kind of very hesitant of it because there's a lot of distrust in insurance companies, and I don't really blame people because insurance companies have a lot of money, and nobody ever goes on the news and says, "Oh, my insurance company was great." That's not a story. So
Yeah. It's like your observation about even government, like your view of it is shaded by what your interactions are, and no one interacts with their insurance company when times are good.
exactly. And so, like, what I do is I basically work through two different types because I do flood insurance and I kind of do homeowners insurance, which are two different things.
Mm-hmm.
Flood insurance is probably the more interesting one for like the types of things you cover because it's directly a government program.
Okay.
It's so I'll just do homeowners because it's faster, and then I'll get to that because there's a lot more
Sure.
there. For homeowners insurance, it's basically just you have private companies. Their job is to pay you if you're damaged. There's not really a lot of incentive to not pay people. A lot of people think an insurance company's job is to find ways to squeeze money out of you.
Mm-hmm.
They rarely do that, and it's not even for any sort of altruistic reason. It's that lawsuits are expensive. So that's what it kind of comes down to. If they're fighting with somebody on a claim, they'd rather just pay it and move on than deal with lawyers and lawsuit and internal fees. So I always work as an independent, so I never work directly for the insurance company. They hire me in when there's like a hurricane or something, and then when they're kind of caught up, that's when I kind of leave. So I don't really have any sort of like allegiance to insurance companies.
Right.
Actually, in some ways, I'm kind of a mercenary. So
Right.
but I'll take that. Yeah.
So, so the idea is shared risk, like you said, which brings to the forefront the question of how the thing scales. It seems like uh, the more people are part of a system, the cheaper it gets for everyone. Would that be fair to say?
Yeah, that's generally the idea. The more people that get into it, the cheaper it gets. There's some mitigating factors based on like high risk areas and this, that, and the other, but that's kind of that's the gist of it. And honestly, like the way insurance functionally works is the same way a lot of public programs work. It's just private business discovered it first.
Right.
The same idea of just shared collective good.
Yeah. Yeah. Which
and it's and so like so I think what kind of makes it interesting is because despite like I mean obviously insurance companies are making money, that's their goal, but nobody like the idea of shared risk is not like a new concept,
right,
and it's almost a little bit of a limited concept. People think of it in terms of homeowners insurance. Social Security works the same way, it's shared risk. Medicare works the same way, it's shared risk. That's even a single payer system. Like that's how a fire department is functionally that. So it's just a matter of a private company does it and skims 40% off the top.
So yeah, it's basically if it were federalized, for example, it would just be a government support type thing. But it's since it's insurance, it's insurance. So that kind of gets into this concept of single payer, which a lot of people talk about. And which you mentioned. So, what is the distinction there? I mean, I know, but just describe from your perspective what that is. What are the advantages? What are some of the possible disadvantages, if any?
Of a single payer system?
Yeah. For just generally.
That's almost feels like a trick question. The disadvantages of a single payer system would, I mean, I think it's a far superior system, so this is a very difficult question for me to answer.
Advantages and disadvantages.
Yeah, so I mean, the advantage is that you have less overhead. You just have like everything kind of connects together. Like we have single payer systems, and right. I said earlier I was going to talk about national flood insurance, which this is probably a good segue here. Okay. So basically in 1974, I think it was, the homeowners companies decided we're not going to cover flood insurance. Flooding's too expensive. We don't want to pay for it. We're not going to insure it. So the federal government had to say, okay, are we going to insure people's houses if they flood? Are we going to have our own program? They said, yes, we're going to create our own program, and we're going to have FEMA manage it. And they give it to FEMA, and then they don't have a full-time insurance company handling it. What they do is what National Flood Insurance does is they say, hey, each of you independent insurance companies, you manage our flood program, we'll pay you a flat 10% profit, and we're just going to pay for what's owed and just do it ourselves directly. And that's how flood insurance works. Okay. And as a system, it's kind of a bit of a hybrid single-payer system, and right. But I think it's a type of thing that you could, in theory, institute as like a stopgap in any number of things, whether it be auto insurance, whether it be health insurance, whether it be homeowners insurance. And I don't know there's a great reason why government couldn't literally run all of those, to be honest.
So it's like a transition type position that you could have where these companies still exist, the jobs still exist, but everyone pays into the same pool and it just gets taken care of.
Exactly. Yeah, and that's functionally how that works. It's basically you're saying we're not going to have a bunch of government employees run it. We're going to let the insurance companies run it. They get 10% for their time and effort, and they manage it. They call everybody. They issue checks. They inspect it. They do all the work, and they get that for managing it. And then they're done. Yeah, which is not exactly as cheap as like what you're talking about with a healthcare single payer, but it's a good transition step, for example, there.
Yeah. So, I mean, like a theoretical model for that as a stopgap for health insurance would be if they did the same sort of thing there,
Yeah.
where they would pay in for these groups to take care of it, but it would all come from the same umbrella, so nobody would be out of coverage, so to speak.
Exactly. And a little bit of the struggle with that is just that it is a federal government program. I mean, that law passed in 1974 before there was quite so much polarization over these types of things.
Yeah.
But it's like it's one of those things where it could serve as a model for something that we have now that would kind of be a transitionary phase. I'm kind of moving a little bit towards the healthcare argument, just because healthcare is a little bit of a sexier topic.
It's on everyone's mind. Yeah.
It's on everyone's mind. Exactly.
Yeah.
It's on everyone's mind. Single payers, the elephant in the room. And really, it's one of those things where everyone always wants to talk about how insurance is too expensive, how it's not expensive enough, it doesn't cover enough people. And there's multiple systems that would be superior to our current one in terms of coverage and payment.
Right.
So, so something that's been floated a little bit, that kind of works into this idea of shared risk, is the idea of catastrophic insurance, where essentially the government would just handle catastrophic insurance, while your private insurance companies handle everything else. They can then drop their rates way down because they're not covering for cancer and like major diseases. That's all going to the federal government, which is being negotiated and separate. So that's kind of effectively how flood works too, where you took something that was naturally higher risk and created its own separate program that's being facilitated by everybody else.
Huh.
Which is, I'm not really here to brainstorm, but I'm just kind of...
it's something
I've spent a lot of time in.
It's an interesting idea that I had not heard pitched before. And something like that could be more palatable, at least, passable through legislation than, because,
and that's what always makes it hard. Once you get into the legislative side of things, that's what always makes it difficult. So
right, yeah, because
you're not sure what can be swallowed and what can't be.
Yeah, for sure. Interesting. So, yeah, like it is kind of it isn't talked about too often because it is very unsexy, but insurance really does creep into a surprising portion of our lives. So you've got, like you said, the Social Security, you've got your auto insurance, mandatory, you've got your housing insurance, mandatory, you've got your health insurance, not quite mandatory, but pretty much. And there's even, the flood insurance is separate as well. There's, I think, a couple of others that even I'm not thinking of. Things like auto insurance and such, it would make sense, even with that, to have not a bunch of competing pools, to me anyway, because then you wouldn't have, like you asserted, more people paying into the same pool, lower cost for everyone. It just kind of is how it mathematically works out for the most part.
Yeah, and something, I worked in Ontario for a little bit, and this is something they do with their auto insurance, which is basically if you're in an accident, you pay your deductible. If it's your fault, you pay the deductible. If it's not your fault, you pay nothing. And what they do is they just pay everything out. They get everybody's cars situated. They get any health issues situated. And at the end of the year, there's a giant pool that the province runs that collects a ton of money. Every insurance company pays into it. And at the end of the year, they all kind of square away in terms of, okay, we had this many claims and these many people are at fault, and you had this many claims, you had this many people at fault. And they divide it up on the back end so that it's not really a hassle for anybody, but it's still kind of somewhat government run at that point.
And that's
that kind of lets them pull it down.
That's Ontario does that?
Yeah, Ontario does, yeah. They do it there. I think there might be another province that does it as well. They do it in Ontario, and it's one of those things where when we talk about, I'm going to slightly digress a little bit probably to your next section, but
That's fine.
When we talk about concepts like income inequality or in terms of like or things or things of that nature, and bills that people have every day, it does get a little bit overlooked that, as you said, you have to have homeowners insurance. And not only do you have to have homeowners insurance, if you have a mortgage, you have to have a good homeowners insurance. Your bank will make you have it. If you live near the water and you have a mortgage, the bank will make you have flood insurance. You have to have auto insurance. You have to have all these things. And these are all kind of just little bills that if everybody needs to have them, you could probably single payer them all out, reduce everyone's overall pay, and then just make them pay into a deductible. And that would probably reduce the overall expense of insurance for everybody and everyone's bills to a lower level. But at that point, you're getting into the single payer arguments. So, but nobody talks about single payer auto insurance, and that would functionally create the same benefits.
Right. And to me, it makes sense, especially for something that is actually mandatory. Like if you're being mandated to buy something, to me, it makes sense that it should be.
That would be the logical next step. If the government is making you buy it, if the banks are making you buy it, if everybody has to have it, but why do you even have the option to not have it if everybody has to have it?
Right. And also, it seems really sketch. This is, my anti-capitalist perspective. It seems kind of sketchy to mandate that something must be purchased, but it must be purchased from a private company. Like, that.
Yeah, exactly. And then, like, I won't even get too much into homeowners insurance, where it's I once had somebody tell me when I talked to them on the phone for an insurance claim, they were asking why, because whenever you issue a check, you have to have the bank's name on it, because they have a mortgage on the house. And I once had somebody tell me, why is the bank's name on this? They don't own the house. And the answer to that was, well, if you stop paying your mortgage, who owns the house? Is it you or the bank?
Yeah.
At that point, did you ever own the house? So at that point, you're essentially paying insurance to insure somebody else's property.
That's an uneasy way of looking at it, but is technically true. Yeah. Yeah,
I mean, like, it's not like the most fun way of looking at it, like you said, but I mean, when you start looking into those things, like, I don't think insurance conceptually is a scam. The goal is not to screw people over. Like I said, what most insurance companies want to do is they actually do want to settle claims. I've seen a lot more instances of paying more than they should over less than they should. And I've worked in 20 years, and I rarely see people, I have seen people overpay multiple times.
Right.
Just because somebody argues.
Well,
and
and no, I don't think that it is a scam either. Well, I mean, I live in Florida. I've had trees come down on my house. I've had tree limbs actually breach my living room ceiling. Honest to God, it was an interesting night. Even had people over to playing tabletop games at the time. And
that sounds exciting.
Yeah. Covering the cost of that on my own would have been prohibitively expensive. So,
yeah, exactly. Though you live in Florida, so this is probably relevant. If you have Gulfstream or United Insurance, they just closed out 50,000 claims in the state of Florida, or 50,000 policies in the state of Florida. So. It's kind of a little bit under the table mass canceling of policies right now in Florida specifically.
Yeah.
Florida has kind of unique challenges.
I'm using State Farm.
Okay, well, you're fine.
Yeah.
Okay.
Now, this isn't directly related to insurance, but it's tangentially related. There was a story that I came on recently, which it was about a specific instance of this, but it was part of a larger trend of um, housing appraising, house appraising, uh, being the data bearing out that it is kind of discriminatory in the evaluation of housing. So in this particular instance, this woman had two house appraising or house assessments, and on the third one, she didn't offer her race. She's a black woman, and her house assessment came out double the value. And what they found in a study was house value assessments were on average 23% higher for white-owned properties for equivalent housing. And I wonder, do you ever see any of that in adjusting at all, or?
A little, actually, you do kind of a little bit, because what winds up happening is a lot of insurance companies, private insurance companies, a lot of private insurance companies won't insure poorer houses that have a lot of claims on them if there's something they fight a lot. A lot of times, if somebody's had one claim on their house or two claims on their house, the insurance company will just functionally say, hey, your house is damaged too much, we're not going to insure you anymore. Now, talked earlier how a mortgage company will make you have insurance. Almost every state has they're called insurance, they're called carriers of last resort. Mm-hmm. Almost every state has an insurance carrier that's run by the state itself that will insure you no matter what. Mm-hmm. And there was a disproportionate amount of minority homeowners on those programs. The reason being for that, I mean, I could speculate, but it's not going to be useful speculation. It's supposed to be for people who've had multiple claims, but there is a high proportion of that. It's not always even cheaper. Sometimes it's even more expensive than standard insurance. And it's just insurance carriers just don't want to cover these types of high risk things. Is there a racial component? I'd be naive to say there's no racial component, but I don't know to what degree.
Right. But a single payer system would flatten that.
Completely. Because at that point, in theory, here's the other side of paying for insurance. In theory, your premiums are reflective of the value of the house. You're not going to, if you have $1 million house, your premiums should, and you're in the same risk as somebody with a $100,000 house. In theory, you'll have higher premiums than the person in the poorer house because it costs less to repair the entire building. And if you had a single payer system, then yeah, and that would function. And a lot of states do run variants of single payer systems for it. But because it's run by the state, because the state has to approve it, because they have to handle it all, and because there's been kind of issues in terms of how it's run and how it looks politically, there's a lot of kind of headbutting in terms of people just having a one-size-fits-all. Plus, insurance companies are very lucrative, very, very wealthy, so they're not going to, they're getting pushed out in the states easily.
Not to mention that states are frankly underfunded compared to the federal government.
Exactly.
So it's fairly difficult for them to set up a robust system on a state level. It can be done, but
yeah, it can be done, but it's a bit of a challenge. And then you have to look at just kind of raw employment numbers. An issue that Obama ran into when he was working on Obamacare in 2009 is that the reason why he said he didn't go to a single payer system wasn't because it wasn't a superior system, but because it would eliminate 3 million jobs for people that work at insurance companies.
Right.
And we were in the middle of a recession at that point. He didn't want to suddenly put 3 million middle-class jobs out of work. So there's always going to be that component of once people have those jobs, once people are in there, do you want to have a cheaper system, but you're eliminating 200,000 jobs from your state, whatever the number might be.
Right. Unless you carried out that transition model that Flood uses, kind of.
Exactly.
It would at least preserve the jobs.
Yeah, it would at least preserve the jobs. That's kind of the benefit of that. Obamacare itself has some built-in things designed to kind of pare it back. Like they're only allowed like insurance companies are only allowed a certain percentage of overhead they can make as part of Obamacare. The idea was to try to kind of start paring down those employees, so it wasn't just a sudden giant mass firing. But
Right.
it's still going to be a functional problem. Is anytime you have major savings come through the reduction of bureaucracy, you have to figure out where are all those bureaucrats going. They'll need jobs.
Yeah.
The and something this was actually a study that just came out today, kind of talking on the insurance side of things too, is that they estimated from the damage that Hurricane Sandy caused, it caused, I believe it was 30 or 35 billion dollars worth of damage when Hurricane Sandy hit New Jersey, New York in 2012, I believe. It caused like that amount of money, but they just found out that $8 billion of the damage was related specifically to climate change, was
Ooh.
to warmer waters, was related to when a hurricane forms. I mean, you're from Florida, you know this. It's going to be it's a large storm system over warm water.
Yeah.
The warmer that water is, the
more
faster the
intense.
hurricane
Yeah.
will strengthen, gets more intense. So suddenly, that climate change element is creating hurricanes, it's creating stronger hurricanes, it's changing all of those factors around, and once you start incorporating that, end result's going to be higher insurance rates. The end result's going to be redesigning how insurance even functionally works if things are just higher risk.
Yeah. Yeah. Because like if that trend keeps up, then you can't just keep jacking the prices higher and higher.
Yeah. And functionally, what'll wind up happening is insurance companies will just start, because like you said, you have two choices: either you increase your rates in what's a pretty competitive market, or you reduce your services. Those are the two things that you can do. So you're going to start seeing higher deductibles, higher rates, limits. In the state of Florida, they have something that's very popular called a hurricane deductible, where it's a percentage of your entire policy. So if a hurricane hits your house, you may have a $12,000 deductible.
Wow.
Now, if you have small damage, that's not going to be highly useful for you. That's why they do, and that's the purpose of the hurricane deductible. It was an agreement that was made years ago because of how risky Florida was for hurricanes.
Yeah.
Create this new deductible, and if the insurance companies don't eat the cost, they don't have to raise their premiums, and that was kind of the agreement that got made.
Gotcha. So you mentioned how these negotiations kind of work out, but they're also private companies. So who are they negotiating with, and what obligates them? Like what?
The primary people they'll negotiate with is a big driver for insurance companies is going to be the competition element.
Okay.
Nothing scares an insurance company more than when they hear that is that another carrier paid something and that they did not. Another insurance company paid something they did not. They kind of would rather, most insurance companies work with, rather overpay their claim. They'd rather say, hey, Frackle, here's a new roof. You enjoy. You didn't really need when we gave it to you, and then have you run around, go on your stream, and talk about how great your insurance company is. They would rather the free marketing from that than they would denying the claim. And that's where those negotiations are going to come from. It's not just with the client, but also just kind of against the other insurance companies, and also sometimes with the state government or the federal government as well, because they have an interest in reducing premiums, because that's what people say.
What you're describing and what I'm hearing are slightly incongruent, because what I'm hearing is something more akin to price fixing, which I know you're not saying, but a bunch of private insurance companies negotiating with each other for what services should be offered and what they should cost.
The way they're negotiating with each other, and I understand what you're saying. They're not quote unquote negotiating with each other. They're competing with each other. So it's kind of, okay, I can get your premiums down to this much. I can get it $10 less than that, and that's kind of it's a bit of it's a free market thing. It's not a smoke-filled collusion.
Are you sure?
I'm actually not sure, so that's really speculation if I'm being totally honest. Could be. I've never been invited to one though.
Interesting. So another thing that that we've talked about and which you've encouraged me to do, which I would invite and inflict onto the audience, is the idea of just getting your adjuster license and becoming available as an adjuster. Make an elevator pitch.
An elevator pitch. Okay. It's okay. Oh shit, that's 30 seconds.
Well, doesn't have to be.
I can't do it. Ramble a little bit.
Yeah, ramble.
Yeah. So basically, most insurance companies function fine on the day-to-day with the staff that they have, but when a hurricane hits Florida, a hurricane hits Louisiana, whatever it might be, suddenly their day-to-day claims, they might be getting used to getting 100 a day, and now suddenly they got 30,000 claims all at once, 20,000 claims all at once. These companies don't have enough people to work those claims. So there's actually an entire cottage industry that exists called independent adjusters, which is what I do. And basically, they just sit back, wait for insurance companies to be badly understaffed for a situation, and insurance companies are just, they have to resolve the problem, they have to take care of their clients, and they will just throw resources at the problem. Whatever it takes, they'll say, bring in 50 people, bring in 100 people, and they'll just throw resources at it. So to do that, you just need an adjuster's license in any given state. Something like 30 states have them, but a few of them just don't have them at all. But once you have that license, it's good for 5 years, and once you have the license, you're legally able to work for any of these jobs should a major disaster happen. And they're relatively lucrative jobs. The downside being that you can't guarantee when they're going to happen. They're not reliable jobs.
Right, but it could be a good supplemental if you had a job where you could take time off for several weeks or so.
Yeah, exactly. It'd be a good supplemental income with that, which exactly. And it can also, and if you can pull it off all year, it's a good thing to do, but that's kind of challenging. It relies a lot on the fact that independent contractors is what most adjusters are. It's just functionally a bit of a broken field. I know that I've talked to you plenty privately about independent contractors with the Pentagon.
Yeah.
I've had that job for many, many years, and functionally speaking, insurance companies will pay not like the adjuster directly, but the temp agency that hires them. They'll pay the independent contractors 3 to 4 times what they'll pay a salaried employee.
Right. Yeah. And I'm reminded a little bit of what we saw during Katrina and FEMA being dreadfully understaffed for handling that, and scrambling to hire people on, not just from a insurance capacity, but also just from a actual disaster management capacity. And I do sometimes wonder, it would be vastly more expensive to keep permanent staff on, but I do wonder, if the system scaled up, like if it went to a full single payer federalized model, would there be room to keep that many people on staff just in case? It also benefits that it would be serving the entire country, so anything happening anywhere would require a response, so it would kind of create more incentive to have those jobs filled and on hand.
Yeah, it could. It's such a variable number because you might nationally speaking, you might need 1,000 adjusters in the country, and then a hurricane hits or you have a bad storm season, or there's just a string of bad weather, and now suddenly you need 30,000 more. So it's challenging on that front to kind of balance that. There's basically two fields of claims adjusting. There's what's called inside adjusting. That's where you work inside an insurance company, you review damages, and you issue checks. very customer facing, and then you have field adjusting, which is the person who goes on the location, usually climbs a roof, takes pictures, and then writes up the estimate itself. A lot of that second one, which has been the bulk of the industry, is kind of moving away. Just it's kind of getting automated and tech wise, kind of driven away by a lot of drones now can actually determine what hail damage looks like on a roof. So suddenly you have a bunch of hail in an area. One drone operator can just fly over 100 houses.
That's true. I hadn't thought about that. And you're seeing that actually getting used.
Yeah, that's starting to get used now. Allstate, I don't think they've moved to a full drone system, but a lot of them are doing things where on smaller claims they're just kind of trusting the person who was the person filing the claim, the insured, to just download an app and take a picture, and they'll write it in. They'll estimate it based on the picture. A lot of auto insurance functionally works that way as well, where a lot of times a person won't even come out. You'll just take some pictures, send it into an insurance company, and they'll wait for like a body shop or something to affirm that price that they have. And that's just kind of interesting in terms of just the automation element of that. So
yeah,
in a theoretical single payer system, you could have things like that. So that's the other side of employing that many people, is whether you even have to in 10 years.
Auto insurance gets into an interesting kind of philosophical question, which I have not posed to you, but I would be curious of your thoughts on. The idea of auto insurance is to make sure that basically someone who currently has a vehicle has the means to replace that vehicle. And I wonder if let's say somehow it were scaled up, it were, single payer, could that mission instead be expanded to ensure that everyone has the means of transport? So it would even cover providing some type of vehicle to people who couldn't afford a vehicle themselves, period. Which, is getting into more left-leaning economy ideas, but curious what if you would see that as hypothetical, possible sort of thing.
It's definitely something that could, in theory, happen. I think there's a handful of functional negatives I would see with that. As of now, most auto insurance companies, if you're in an accident, they'll pay for you to rent a vehicle until your car is fixed. They'll usually cover your rental. I've seen some companies who are kind of app-based and a little more Silicon Valley style insurance companies that have tried to say, hey, if you're out of a car, we'll pay for your Uber, we'll pay for any of these other services. If in a single payer system, you could in theory kind of guarantee that level of transportation for people. I think the knee-jerk I would say about that is that would probably run pretty contrary to a lot of the climate goals in terms of getting more cars on the road. I think there's a bit of an incentive to get less cars on the road, and less vehicles overall. So I think that would probably be the downside. There was a Stanford study a few years ago, actually I think about a year ago, where they were speculating that over the next 10 years, like 70% of cars are not even going to be on the road because it'll just be cheaper to just Uber everywhere than it will be to pay for auto insurance and payments. Once automated cars come about, that was kind of the idea behind that. And maybe, we don't really know, but there's a lot of service jobs.
Yeah, that actually is where it works even better and is something that you see in a lot of cities. Well, not a lot of cities, not enough cities. It was is effective public transport, where just by living there, you can use it basically freely as much as you want. Sometimes there's a small fee or whatever, but that kind of model would it would cut down on costs. It would cut down on cars.
And that very well may be where it's heading. I wouldn't be shocked to see, like you said, just kind of a payment system. Everyone pays in $100 a month, whatever, $50 a month, whatever it might be, and then you get Uber access. You don't have to pay for the insurance, or you get automated taxi insurance. Optimally speaking, you'd want the city to just run those services and not Uber.
Right. Yeah.
That might be kind of the future you wind up seeing with that, and in some sort of single payer model.
Yeah, it seems like that would play very well into that sort of thing. Interesting. Let's see.
The part where you bring up that awful Israel-Palestine map.
Oh God, I can't deal with that map.
Broke your brain for a week.
No, and it still is something that people just I don't think anybody talks about that enough, because everyone's just like, okay, well, they need to fight and the Palestinians need to be free, but free where? Like, free in these multiple disjointed pockets where they can't actually like move food and gasoline and everything else between their different pockets of civilization because they're blockaded. Like that.
Yeah, there's not. It's that one road. I know the exact road you're thinking of. There's that one road that goes through the Palestinian territory in the south. It just goes through 2 checkpoints there for no reason.
Yeah, and it's all over that map.
The worst part, I don't know if you've looked more into this, but take a look at some of Israel's 1990s maps that they've kind of proposed for a 2-state solution.
I have.
And they just have tunnels of Israeli territory. Just follow a road.
I know.
And then their side is Palestine, and it's like, okay, so you own the road that gets everywhere. And then there's the same countries on either side of that road.
But that they understand, and that's the point that I was trying to drive. And that's the transportation planner perspective: is if you own the roads, you own the logistics. If you don't own the roads, if you don't have contiguous routes, you can't actually service a city. You can't provide power to it. You can't provide right-of-way to it. You can't get goods in and out of that place. That's just the reality of it.
If I were to speculate on that map, I would guess that Israel had good representation in the room. Palestinians did not have good representation in that room. That would be my guess of how that worked out. Because it's just every 2-state solution that Israel has proposed basically involves them controlling every road.
Right. And yeah, a lot of that comes down to having a more developed, basically functional government structure, so they actually are able to analyze those logistics better. Palestine's been on their back heel for quite a while and hasn't really been able to address those things and get a strong, I don't know what the Palestinian Department of Transportation looks like, but it's not going to be as sophisticated as Israel's. I'll tell you that. So
yeah, according to the map, they have no roads.
Right. So
roads it was by Israel.
So that is what frustrates me with kind of the shallow surface level discussion that is going on around that situation. Is like a ceasefire is not resolving anything. I'm not saying that they should keep warring, but just being at peace is not actually going to help anything either. There are irreconcilable problems as long as those borders are drawn the way they are.
The stalemate itself is not functional.
Right. The stalemate itself is still it's still creating a violent environment. It's just violence through deprivation.
Basically. I don't know how off topic I can get here.
Go for it.
But
as off topic as you want.
All right, awesome, awesome. Rank choice vote. No, I'm not gonna do that. The basically with Israel finds itself, structurally speaking, with the perfect war.
Mm.
It is a war that has highly acceptable losses on their end. The Israeli fatalities are very low. Get to be into a perpetual state of war so they can kind of rally their voter base to always be afraid of the specter of war, and they're able to keep their current power structure through the threat of that war. They don't really care about a rocket attack, two rocket attacks, because when you look at the grand scheme of things, those are infrequent. They don't really cause that much damage. It more just kind of gives Israel an excuse to kind of roll in, show off their military, and rally the base back home, which keeps the Israeli right in power. That's the benefit there. So if
it's the Oceania was always at war sort of thing.
exactly, and especially I can't, but can you think of any country in world history that has had a bargaining chip, has had a point of leverage, and just willfully given it up because it was the moral right thing to do?
Not really.
Because
no.
that's where Israel's at. They took that land after the 1967 war. They traded and a bunch of other land. They traded a lot of that land back to normalized relations. They took land from Egypt. They traded it back to Egypt to normalized relations. They took land from Jordan. They took land from Lebanon. They traded all those back to normalized relations. Nobody came knocking for the Palestinian land because nobody had really heavily owned it. So
and
now they have
land.
that. Exactly. But so now they have that land, and nobody's really asking for it. People kind of nag them to give it back, but really on the international level, nagging is really about as hard as people have been on Israel.
Mm-hmm.
And the EU doesn't want to make a whole thing about it because they don't want to get the US and they don't want to get involved with the US. It's not high enough on their radar. The US, it plays with the religious right. They don't want to make a whole thing about it. So they have no incentive to give it up. They probably would give up the land if there was a direct incentive for them to do it, but they have none. It's all beneficial for them. That's just structural. That's not even a moral who deserves the land, who does the land belong to. It's just state of nations. That's how nations are going to act.
Yeah, it's a little. That framing is kind of something that I've been trying to do a little bit more of, is to understand how things happen. I've mostly been applying it to like police departments and stuff, but that's very interesting. Basically, gamify it. Find out what are the parameters that create incentive, what are the parameters that create disincentive, what actually is the maximal way to, play into your incentives while minimizing your disincentives. Remove any sort of, morality from it. That is how a system will work, and governments are systems. So that makes sense. That makes sense. It's
and a lot of these
depressing.
Systems, it is depressing. And a lot of these systems, when they're designed, nobody really knows how they're going to work in their extreme.
Mm-hmm.
A lot of these systems may even work well 70, 80, 90% of the time. But it's when people start discovering things, you start having bad incentives. And once you have the bad incentives, then that's what everyone's going to fixate on. If you can't eliminate those, that's just kind of a flaw in the system. And that's kind of really where Israel is at. Like, nobody's really offering them money for that land. None of the if any of their Arab neighbors was offering them money for the land, they probably would have sold it, to be totally honest. They don't they're not getting basically they have something, and they're hitting renew on their Craigslist ad once every 45 days. There's no buyers.
Yeah,
it's a very depressing way to look at it, but it's also not a wrong way, I don't feel, anyway.
Not a wrong way to analyze it. It's
not a wrong way to analyze it. I think it's morally wrong.
Right.
But like you said, at gamifying, when you go into systems, morality is kind of determined. after the results. You can criticize the process, you can criticize the system, you can criticize the incentives, and what that spits out. You can argue what that spits out is moral or immoral, but the system itself is just a system. It's only going to behave how you design it to behave.
Right. And if it's behaving badly, it definitely needs structural fixes.
Like you talk about with cops.
Yeah.
Either fix it structurally or you make a new system, or you do nothing and benefit from the current system.
Right, which is where Israel and frankly the U.S. is. Like you mentioned the religious right, and they love that ongoing conflict because it feeds into Muslims bad, scary.
Exactly. It creates a low level of jingoism. It creates it plays into Islamophobia, plays into these types of angles because it just allows it wins votes.
Yeah.
Politicians are functionally short-term motivated. They have elections every 2 to 6 years. So in mostly every country, and the goal is always, how do I get reelected? That's the goal. Whatever that takes. Long term doesn't matter. You got to win short term first.
Yep. Yeah.
I figured that was good and depressing.
No, I mean it's. I read essays on police abolition, which gets into some really depressing stuff every week. So yeah, it's where this channel goes sometimes.
I know the police side of things. Yeah, I won't even open that can of worms.
Yeah, that one's getting through it though. I don't know. Did I mention to you that Kaepernick and Kaepernick Publishing is actually, they're going to be refining and publishing that series of essays as a book, possibly with some additional works added to it, coming out later this year. So
interesting.
Yeah, my coverage of it may be prescient.
That'll be good. That'll be good to have that all in one spot, though.
Yeah.
I haven't really read through many of those essays. I have to actually take a look at them. I'm sure they're doing fairly good work. Kaepernick is a little bit of a polarizing figure for me personally, but I followed football for a while. But I think that I think the work he's doing, I'm sure it's very good.
Yeah, it definitely is. And like the essays themselves, he himself wrote one. He mostly organized getting a bunch of activists and lawyers and advocates and people just with lived experience and academics to write on the subject from various different perspectives. It's
a great use of a microphone. Great use of a megaphone now. Just
being introduced to all these other writers, like I've been consuming a lot of books and writings from them. It's very eye-opening because, well, I mean, I'm white, criminally white, so I
noticed.
I live oblivious for most of my life to the racial divides that are everywhere here.
Yeah. I'm in the same boat, so I completely understand what you're talking about on that. So, it's not always the easiest, but the important thing is you're using the channel, you're promoting the thing, so that's all you can. That's what you can do.
That's what I try for. Chat's been quieter than I expected, but if anyone is out there that has questions, otherwise we're coming up on an hour, and we'll be phasing out here. Give people a little bit of time there, but I have, for my part, I've really enjoyed this discussion, and I guess there was a number of things about insurance that that I was unaware of, and you have some really interesting ideas on how it could be scaled and transitioned in a way that would be more palatable. I think that's probably the biggest takeaway, because that, you know, first of all, it undermines a lot of those talking points about why we can't do, Medicare for all or whatever, and because jobs or whatever. But it also, um, I like hearing more fleshed out ideas because I do have a fairly limited understanding of, you know, insurance and health insurance and all that. So, uh, just being able to understand the system itself and alternate ways that it could be implemented to still achieve a better effect than we have today is, yeah, been very elucidating.
Yeah, the idea that like health insurance is either fully private or fully single payer is kind of a little bit of a false dichotomy. So a
Right.
lot of intermediate things there that, as you said, nobody really talks about because people discussing it don't really know insurance. They're really say private because you're paying your base. You say single payer because you're paying to your base.
Right. Right. And sadly, policy wonks are few and far between.
Yes, I mean, I don't get me wrong. I love policy wonkery. I could do it all day. I do it all day.
Yeah.
But it's not the sexiest topic. Insurance reform is not a sexy topic. I get it.
No, but it's an important one, and it's one that
Yeah.
literally impacts everyone's lives and literally is life and death for many people. So no, it's not the sexiest topic, but it's an important one, and it is one that people should develop a better vocabulary for and better awareness of. So I really appreciate your time and willingness to come on and chat with me and
Of course.
much about
Thank
this.
you for having me.
All right.